Yesterday we had retail sales numbers from the UK and the US, and we had an ECB conference, yet markets have not moved. Let's talk about it here at Capital Markets. Traders, guys, welcome back to Capital Markets. My name is Cleveland Bishop here to give you guys the fundamental and the technical analysis on a daily basis. So make sure you guys stay subscribed. And as always, if you guys ever have any questions regarding fundamentals and how the different data releases are going to be impacting our currency moves, or the technical approach where we could potentially see certain breaks, make sure you guys can just comment below and we'll be right there to answer them. All right, so on Thursday, we had retail sales data and the US dollar surpassed all expectations. Expected was 1.4. We ended up getting 0.8. We haven't seen a deviation that high from retail sales perspective in years. Okay, so the economy is on full blast, and that has been expected. That's exactly why the Fed heightened rates yesterday. Outside of that, unemployment claims for the U.S. also came in under expected, which is what you want to get. 218,000 unemployment claims happened in the month of May, which is again under the forecasted 223,000. So right now, the Fed is on track to do 2 more rate hikes throughout the second half of the year. And if we keep seeing numbers like this, we might see them potentially start to want to heighten rates in Q4 twice, which means we may see even more buying of the US dollar. Yet we haven't seen too much buying happening over the past few days, and that's just based off the fact that we've priced in the majority of this data in that April move and that March move as well. So again, we won't see any kind of massive fluctuations in price unless we start to see the Fed wanting to heighten rates for an extra interval. We saw pound also had retail sales numbers. Now pound, on the other hand, again, positive, but not highly deviated away from their actual number. Here's their numbers here, and the pound has had a hard time trading higher. We've seen a lot of massive sell-offs coming in from the GBP. Here's a quick screenshot, guys, of the GBP USD. You guys can notice that the pound has not frayed well when it comes to the US dollar. We can even show you guys the GBP NZD. You guys can see again the pound not doing too well. It's losing strength across the board, and that deals a lot with Brexit risks. Even though those Brexit risks have lightened off a bit once they mentioned that they were going to be doing negotiations in 2020 instead of 2019, that bought the Parliament over there in the UK a little bit more time to potentially figure out exactly how they were going to Brexit, how they're going to leave the European Union. That still hasn't brought back too much strength. So we'll see how investors' flight to safety from not buying into the GBP pound is going to impact the overall economy as a whole. And so we did have an ECB conference as well this morning. That ECB conference, again, didn't move markets so much. Since Tuesday, the markets have been fairly stagnant, and we thought that we would see a little bit of a price move based off of the Parliament speaking, but we didn't get much. And that's usually because Draghi doesn't want to impact markets too much. It's called jawboning, where he'll start to impact currency movements based off of certain things he says. Trump is a fan of it, and even our Treasury Secretary, Steven Mnuchin, is also a fan. Draghi, not so much. He criticized Trump and Mnuchin a few months back for mentioning anything about where they wanted the currency prices to go. So again, Draghi, they want to end their quantitative easing policy in 2019. They said they will do it, but they won't see themselves heightening rates until after the fact, which makes sense. You're not going to be printing capital and at the same time heightening rates. That seems somewhat counterintuitive. So it does seem as if they are going to be quitting the monetary policy, but we won't really start to see some strength coming into the euro up until we start to see them wanting to increase the actual interest rate itself. Australia had some data claims that came out last night as well. Australia somewhat stagnant. We were expecting an up move on the Aussie USD. Here's a quick screenshot. You guys can see that market's still consolidated. We're looking at a break right here at this price level higher. Markets did trade up into that price area, but they pulled right back down into that previous structure. Interesting. Again, that came in partially because of a slight bit of Aussie weakness that happened based off of some of their unemployment claims that got pushed out last night. Australia, heavily dominated by commodity prices, is very impacted by things like gold, things like iron ore, things like coal. And when we see iron ore start to increase in prices, we usually see the Australian dollar start to trail right behind it. So that's something we'll be keeping an eye on, and we want to know what you guys are thinking as well. So make sure you comment down below so we can get some insights. If you guys want to get these videos pushed straight to your phone, make sure you guys stay subscribed. And we're one of the top brokers in the entire industry, capital-markets.com. If you guys need some tight spreads, then head over. Tight spreads mean you're going to be paying less per trade, and we route from some of the best liquidity providers, which means you'll be filled instantaneously. Okay, head over to capital-markets.com. I'm Cleveland Bishop. See you guys next week.